Hi there, welcome to another live webinar with us from Phillip Nova. And in the studio, we have none other than Ming Lam, our favorite deputy head of research, Asian research at Trading Central. And what will we be discussing today? It will be big tech stocks. Can we expect a comeback in 2023? As part of the outline for today, Ming Lam has detailed for us. He gave us the context of what's been happening. 2022, as you know, has been a painful one for stock investors, particularly those holding big technology stocks. For example, Tesla and Amazon have slumped to the lowest levels in over 2 years, and Apple fails to post any meaningful rebound. Why are these big tech stocks so hard hit? Are there any changes in the company's fundamentals? And more importantly, can we expect a comeback in 2023? In this first webinar for 2023, we have Ming Lam, our Deputy Head of Research for Asia for Trading Central, will help you answer these questions and more in today's session. He will discuss in detail using both a technical and fundamental perspective to share his views on how these stocks could be traded in 2023. Apart from US tech stocks, Ming will also touch on some Hong Kong listed ones that you should keep a close eye on. Don't miss out on today's session. Stay tuned, and it will be coming right up very shortly. Just for those who are new with us, Ming Lam is currently with Trading Central. He's the Deputy Head of Research for Asia. He graduated from the University of Hong Kong with a bachelor's degree in engineering and is currently a responsible officer registered with the Securities and Futures Commission of Hong Kong. He has been engaged in translation and research operations in the financial services industry for over 10 years. In Trading Central, Ming specializes in technical analysis of stocks, foreign exchange, commodity markets, with a goal of providing customers with independent and superior market insights. And before we jump into those market insights, we have a few words from Rebecca, also from Trading Central, who will be walking us through the Trading Central trading tool platform. Rebecca, if you're all set to go, I'm going to give you sharing rights right now.
Thank you. Right. Good evening. My name is Rebecca. I'm Client Success Manager of Trading Central, and I would love to quickly present Trading Central tools available for Phillip Novers. So if you have Phillip Novers MetaCode 5 already, you can download our indicators as an additional tools from the website. So if you go to the website of Phillip Nover, go to platform and click on Phillip MetaTraders 5 Suite, it should bring you to this page. And if you click on Trading Central, you can then find this button to download Trading Central indicators here. So once you click on download, the setup will begin. It's a very quick setup. Just select Next and select the MT5 server name, and the plugin will be installed onto your MT5. So for MT5, when it's being installed, you should be able to find it on the left-hand side at the navigator bar. Under the Trading Central folder, you should find a few indicators that we have. So I would like to introduce you with NNS views first. So if I just double click or drag and drop onto the right hand side and click on OK, the indicator shows up. So for example, we are looking at Euro USD right now. You can see that our view is rise. So for the particular product pair, it means that our preference is rising. R1, R2, and R3 is our target price. Pivot points could be our stop loss point, or if you have a better confidence in it, you can also use S2 as well, where S2 and S3 are the support line. So you can have a very direct view using our house view directly via our MT5 plugin. You can also find our description on the lower right for any comments or what's happening. I'll definitely recommend you to look at the date as well. When is this being released? So any popular pairs, the update should be around 2 hours. So we do have other indicator as well. So for example, we have candlestick, and I can just drag and drop to the right hand side and click on OK to see it. So we automatically able to detect 16 indicators, where you can just hover a mouse onto it to really understand, what kind of candlestick it is. So in a nutshell, if it's above the bars and it's in red, it should means it's a bearish signal. Whereas if it's a blue and it's underneath the bar, it's a bullish signal. So it's very easy to use, and you can just change the frequency directly and see, what kind of indicator that we can find. So as for now, since our house view is rise, so you might want to wait, or you might want to see, if there's a candlestick pattern that might align with our view, then it could be a very strong, preference on rising in here. So ADC is just another indicator. So I'm just going to indicator list in our indicator and now candlestick, and I'll just remove it so it's easier to see from your side. So once I click on OK, it should go. Wow, so I can just drag and drop. So for ADCs, actually, an indicator is being created by Trading Central. We combine both the MACD and RSI together. It basically gives out sell or exit signal as well. So you can use it according with the candlestick as well. Again, we always recommend you to go forward with our preference first. So for example, if the indicator has the same view as our house view, then the confidence in it might be stronger. On the other hand, I would love to introduce you with our expert advisor as well. So if you go to expert advisor on the left hand side and click on Trading Central, just click on OK again. So a window should pops up, and you should see a few of our indicator in here. So we have Forex Future Idea, Economic Insight, and TC Market Best as you can find. So Forex Future Idea is basically using AI to really understand what's happening, what's the opportunities that we can have. You can always click on custom settings to find the best settings. You can just enter all the symbols that you want. Any bar size and holding time frame. For the charts and technical, if you don't have any preference, I will always recommend you to go forward with classical patterns, and because it gives a very direct view for it. So for example, we can just go to this US dollar to Czech Republic, and you can see that we can found a pattern, and this pattern already gives you like a target and how long this target has been met. So as we can see for this green box in here, it's basically the target price that we would like to meet, and you can see that by chance this the target of this particular patterns has already been met. So classical patterns always have a very straightforward target price, and it basically means a very strong bullish or bearish signal as well. So you might want to use it as a reference on your trade as well. On the other hand, we understand that for a lot of clients, you would like to look at economic events, and this is a perfect tool for you to really look at it. So I'm just gonna skip it. You can always go forward with it, and I just want to show you the most powerful tools with the functions within this tools. I can look at what kind of volatility that I have previously. Let's say I would like to look at 15 minutes, 5 minutes, then I can see historically what is the statistic of this particular event. So let's say I'm more an event trader, then I will know, all right, so in the past kind of few events, most of them are actually ended with bearish, and how many is actually been ended with bullish, and what's the volatility as well. So it's very important when you are a kind of event trader and you want to see what's happening with this. Okay. Last but not least is our TC Market Bus. So we have gone through some analysis, some technical insight, some economic insight, and this is actually a new sentiment kind of analysis. So we are looking at themes right now that we created with Phillip Nova. So you can just zoom in a little bit, and you can see, the bigger the bubble is, the more buzzing it is. So you can see, with this crude oil, what's happening with it. You can look at the most discussed topic to really understand what's been discussing in the news, or you can actually look at the news feed as well. Now we can see its overall is actually buzzing, and then the trend analysis is actually falling right now. So we can really have a mixed feeling of, okay, this is what technical or technical analysis is. What is the current kind of news and analytics about this product pair, and how we can actually better, trade with this. So to give you a nutshell, what kind of overall trading analysis that you can have with Trading Central. So that's really a quick introduction of Trading Central's tour. I hope this tour will be interesting for everyone, and I highly recommend everyone to just download the indicator from Phillip Nova website. It's free for all users, and if you have any question, you can just feel free to reach out to Phillip Nova, and we are always happy to help. Okay. Now I'll let our head of Asia Research, Ming, to present his topic today. Thank you for now. Bye.
Thank you so much, Becca. And now it's time for the main event. Let me just give him sharing rights, and Ming Lam will take us away. Ming, if you're all set to go, over to you now.
Okay, thank you, Sri, and thank you, my colleague Rebecca, for introduction. So, well, ladies and gentlemen, welcome back to our ladies and gentlemen, welcome back to our once per month webinar. So, I'm Ming Lam, Trading Central Hong Kong. I'm a full-time analyst, and what an analyst does, we watch the market every weekday. All right, and whenever we have got some insight, we have made some observation, we share them with you. All right. So first of all, this is our first webinar for this year. So I will take this chance to wish you and your family a very happy, healthy, and prosperous New Year 2023. All right. So now today I will talk about big tech stocks. Most of them US stocks, and a few of them will be Hong Kong listed Chinese tech stocks. So most of them could be found on the platform of Phillip Nova MT5 platform in the form of CFD. All right, and okay, let's go. Today's webinar, no worry. Today's webinar will last for around 30 to 40 minutes. I will make it brief as usual, brief and concise to the point. And I hope this is helpful to you, to your trading. All right, so as you know, it is my style to put up the conclusion at the start. Well, you know what? Last year 2022 was a horrendous one for stock investors, and particularly for those investors on US tech stock. Okay, so today I will show you how big tech stocks were impacted last year, and going forward, more importantly, going forward, how we should build the past year plunge. Should we capitulate? I mean, should we raise our right flag, or should we see it as a chance to buy the dip? Okay, buy the bargains. All right, and okay. In all, last year's market drop was due to one thing, as you can see on my screen, inflation. Okay, inflation, and then which caused the Federal Reserve, US Federal Reserve, to hike interest rates extraordinarily. Okay, but now our conclusion is that we are seeing US inflation slow down, and also the Fed has already slowed down. Last time, last month, it raised interest rate by 50%. 50 basis points. Okay, after 4 consecutive raise of 75 basis points. That was extraordinary. I will show you, don't worry. All right, so our opinion is that big tech stocks have fallen enough, and they are bottoming out on the to the upside. And also, you may know that some Chinese big tech stocks has already rebounded. All right, we will show you that. And of course, there are always risk factors in investment or speculation or trading. All right, we will share them with you, no worry. Okay, so let's go. First of all, it is an updated chart showing US interest rate, UK interest rate, European interest rate, and also Japan. Sorry for the Japan, but and Japan is still negative. Okay, and for the US, as I mentioned, last month it raised interest rate by 50 points. Okay, now it is a market consensus that the rate maximum level they are going to see 4.5 to 5%. Okay, and then we keep it for the whole year. I can't see. Well, those experts say for the whole year, or those high-ranking officials will say, well, we will keep it for a whole year. But let's see if situation changes. I mean, if inflation is further, they will do something. I mean, stop and then reverse. All right. So now this chart shows you how serious the recent U.S. Interest rate hikes are. You see, this is the steepest one in over 40 years. It is just unbearable for the investment circle, for the investment. Okay, so this is last year, 2022. It is very steep. Okay, this curve is very steep. As far as I know, the interest rates in the US just increased 17 to 18 folds. It is not 18%, it is 18 folds from the start to the current one. 18 folds. Okay, 18 plus. Okay, in just within 12 months. So it is to me it is too much. All right, so what is the situation now? Today I'm not going to get in very deep in macroeconomy, but I will just show you one factors. That is, of course, inflation. Okay, inflation seems to be peak in June, 9.1. Okay, and after that we see gradual decline in inflation rate. And I have to remind you tonight, I mean US time before the market, US time, US New York time, 8:30 in the morning, and that is 9:30 Hong Kong time or Singapore time. They will release a very important another set of inflation data. So the market generally widely expect that last month, December, the inflation rate on year was 6.5. Okay, November 7.1 and December 6.5. If this is the case, if you see a further easing in inflation rate, we will see the Fed will have no bullet to shoot the inflation rate more aggressively than 50 or 75 basis point next time in February. All right. So one more pieces on data. That is the US ISM manufacturing PMI. The latest one. Well, you know that the 50 level is a division between expansion and contraction. Okay. So you see now the latest reading is 48.4. 48.4 below 50. That is contraction. Okay, And then we see another big sector in the US economy, surveys. Okay, ISM surveys PMI, the latest one. Well, in fact, it got us by surprise because it dropped very rapidly. Okay, you can see now the latest one is 49.6, contraction again. So congratulations, Federal Reserve, you have got what you want. Okay, so the central bank has got what it wants. Well, contraction in manufacturing, contraction in service industry. All right, so now going forward, I will show you some beautiful charts. Okay, stock price charts. And I have to, every time I will give you a warning, just do not trade on technical analysis alone. Okay, you have to take into also consideration of the macroeconomy factor, and also take into those individual companies' fundamentals. Okay, so do not trade with TA alone, but just take it as a reference. Okay, so let's go. All right, so Nasdaq 100 index, NDX. How did it do last year? Down 33%. Okay, so I have to make a reminder here. For today's chart, it is a little bit special. I will show you a weekly chart. That is one bar represent the trading in 5 days. That is a week. Okay, so so that I can give you more information in the chart. So most all charts today will be like this, weekly chart. Okay, so now what happened? We are seeing lower highs. Okay, what this bull line means, this horizontal line means that we have to see the index back rebound up to 13,000 points level, and then we will change our view to be bullish on the index. Okay, it is 30,000 points is around this thin bull line. It is 50-week moving average. Okay, remember today we're using weekly chart. Okay, one bar meaning 1 week trading. Okay, the nearest support is at 10,000 points. Okay, and we are seeing that, in fact, we are seeing that this maybe another reminder here. We have the price chart on the top, and then below the two charts are momentum indicators. This is my style. Okay, MACD and RSI, related strength index. Okay, we are seeing that these momentum indicators are turning, showing, I can say, showing signs of turning up. Okay, of course we have to let time to tell us whether they will be improve further or not. All right, so this is the big tech stock. This is the tech stock sectors in general. Last year it was down 33%. Okay, going forward we jump into individual stocks. First of all, Tesla, and I know this one has given investors a lot of headache. All right, and because we are seeing a very interesting CEO, Elon Musk, and he has just bought Twitter. Okay, so he seems to be involved in many businesses. Some analysts will say, what happened to these stocks? So last year it was down 65%, and it is very bad. And you see, it has already broken below a declining channel. This one is a trading channel for over a year. Well, most tech stock peak in November of the 2021. Okay, so the downfall of the tech stocks has lasted for over a year already. And it is a long period. It is a long time in stock trading for bear market. So what's the review? Look at this, and we are seeing that the momentum indicators, are particularly RSI, has touched a bottom. I don't know if it will go further or not, but it is we are still waiting for it to turn. Okay, I can say so, waiting for it to turn. And I will at the moment I will not be bullish on this one until the stop price gets back to 185. Okay, 185. Okay, for this one. You see, and on the other hand, you can see that we see the RSI is in a very oversold level. Okay, the stock Tesla has been oversold, I can say. But do you know why? Some other factors also affecting Tesla. One factor maybe you do not know, and but we notice that the option trading, options on Tesla, this stock is huge. The volume is huge, and as far as we know, the volume of Tesla options, stock options, is the largest, the biggest one among US stocks. Okay, so whenever it is involving option trading, a huge sum of option trading, the price, stock price, could be influenced and could be very volatile, as we have seen in Tesla. Okay, Tesla, I think it just breached well, $100, just slightly above $100, and then it just rebound for 10 or 20% lately. And well, I give you some fundamental of Tesla. In fact, this is the annual vehicle deliveries of Tesla, just released. Last year, it delivered over 1.3 million cars, products. Okay, and it broke record. It is record level. Okay, you can see over the years it has been breaking delivery levels. But as you can see, the financial media doesn't like it. They don't like it either, because they think it is not the break. The record breaking is not big enough. Okay, one more point. The growth of its sale last year has outperformed most of the automaker, okay, in the US market. Okay, now this one, Model Y, I'm well, you know what, I'm saving up money for a car like this, so I will tell you when I buy one. And well, you know what, Model Y SUV is the best-selling car in all of Europe. It is a very latest news. Well, remind you, this is the best-selling car. It is not the best-selling EV car. It is not the best-selling electric vehicle. It is best-selling car, including those car with internal combustion engine, burning petrol, burning diesel. Okay. So you can see how powerful the product is and how popular his product is. So one more point on Tesla, and well, you know, it is a car company, all right? Something more, truck, semi-truck, and it has delivered its first trucks to Pepsi drink company. Okay, this one, Cybertruck, is very popular, and they have already stopped your ordering. Okay, the order book is over, I think it is over 1 million or 2 million. Self-driving, it is involving AI software. Okay, robotics. I know this robots made by Tesla is called what? Optimus, right? Optimus. So you see, anything more? Oh yeah, solar roof. And it is also an energy conservation company. So when we are talking about Tesla, we are talking several companies in one. All right. So for the long term, this stock is a big one. Okay, next one, Apple. How did it do last year? Well, Apple and other big cap stock and Microsoft, they were relatively less impact last year, but they still dropped over 20%. Okay, so I repeat, Apple, the biggest market cap US stock, and also Microsoft, they were relatively compared to other big tech stocks, Apple and Microsoft, they suffer less extent of impact last year, but still Apple was down 27%. It is still in a bearish channel. Okay, and well, like Tesla, the momentum indicators are still on the downside. Okay, are still on the downside. How should we trade this one? Well, in the same situation, we are seeing the 50-week, again week, okay, 50-week moving average around 153 will be our parity point. It means that if Apple stock can rise above 153, we will turn very bullish. All right. Well, you know what? And this is the latest result from Apple yearly result. Okay. Last year, you can see 99.8 billion net income, and it is still an increase. Okay, and I've seen many critics on the Apple regarding their products, but why? You know what? iPhone comprise over 47% of Apple's revenue. Okay, and I would also draw your attention to Mac, the Mac notebook computer. Well, in the last quarter, it means the fourth quarter of the financial year, iPhone revenue up about 10%. However, the Mac revenue was up to 25%. This is the weighting of the product in the revenue. But last year, iPhone revenue was up 10%, MacBook up 25%. So we have also have to look into the MacBook, the coming models, coming revenue, and also Apple services, which include Apple Music and Apple TV Plus. They also jump in the last year, 2022. However, the service revenue, the growth has seen a trend of declining trend. Okay, so Apple, we are still looking at iPhone product and also the MacBook product regarding the revenue. Okay, so another big tech revenue, big cap tech stock is Microsoft. Okay, its capitalization just follow Apple, and okay, last year it was down 29%, nearly 30%. But Apple was down 27%. Remember that. And Microsoft, same. We are seeing a declining channel. Well, you may find that most big tech stock, the stock price, are showing similar pattern of a declining channel like this one. And we are, yeah, of course, the momentum is not pointing to the upside at the moment, but we have to see if a bottom is in the making. Okay, so for Microsoft MSFT, we see that the key resistance, we call it key resistance, or the pivot point, is at 272. Okay, and it is same around the 50-week moving average. Okay, and also the upper Bollinger Band. Okay, and if it cross clearly above this level, well, goodbye. Okay, maybe we can talk some more about Microsoft. Well, in fact, Microsoft his financial first quarter end in September. Well, also impacted by the whole PC market demand decline. Okay, and well, in fact, I will take you down to a little bit more details. Look at this one, Microsoft Azure. What is it? It is a cloud business. Okay, cloud business. But I can tell you that for the last quarter, Windows that is Microsoft Windows OEM sector, the revenue dropped. Well, when we talk about Microsoft, you know, well, Windows Office, right? And well, in fact, that kind of business, the revenue dropped 15% year on year. However, this business, this cloud service, this cloud business, Azure, the revenue is up 24% last quarter to 25.7 billion. It is amazing. At the same time, you know what business? Yeah. So this one I will show you that the big tech stocks are heavily involved in the cloud market. Okay, I will show you later also. Amazon has the biggest share, and then followed by Microsoft, Azure, and also Google Cloud. Okay, now Microsoft, you know that it is also very deep in gaming, the gaming business. And last year, it proposed to acquire Activision Blizzard. Okay, a big deal, 68 billion, something like this. And then lately, we have the news that Microsoft may invest $10 billion in a ChatGPT. You know what is ChatGPT? Well, it is a AI free of charge AI product developed by OpenAI, a company called OpenAI. It is amazing. Well, you can just type in the ChatGPT. You can ask GPT to write you an essay if you give it a topic. Okay, my daughter say she will use it to do her homework. Okay, so it is amazing. So we are seeing the great trend that the big techs they are also invest bigly in AI, and AI is a big theme going forward. As you can see, Tesla is also an AI, the FSD, full self-driving. It involves a lot of AI. Okay. And next one, we talk about Google. And last year, it was down 39% last year. And same, we have a downside channel which has not yet been broken. Okay, I mean the stop price is still within this channel. Okay, and we need time to see if the momentum has bottomed already. I mean the downward momentum has bottomed already. Okay, so 110 will be our key resistance point, the pivot point. Okay, so Google, this is the latest quarterly result. And okay, when we talk about Google, you will see a Google search, right? It is search engine, and you have YouTube. Well, you know what? Well, you know that Google is the biggest search engine in the world, and for the second place, we have some argument. Some say that it is YouTube is the second biggest search engine, and some say that it is Baidu, China's Baidu. I think YouTube is better, right? And well, you know what? We are seeing well, we have recession fear. We'll talk about this later. We have recession fear. We are seeing online advertisement spending drop for some time, and that's why this Google search advertising and YouTube, their growth, you can see the revenue growth, the income growth is not much. However, have you noticed that Google Cloud, the revenue was up 38% in the last quarter. So it gives you some hints that it is cloud service again. Okay, so for the whole business last quarter, Google net profit 14 billion, 20% margin. Okay, the margin has been down 9 points year on year. Okay, that explains is a weakness in share price. All right, so again, I have to draw your attention to Google Cloud service. Okay, now I give you a game. Can you recognize one, two, or some of these companies? They are all Google's, or Alphabet. Okay, Alphabet. And of course, you know YouTube, you know Google Map. You use it every day, maybe. Google search engine. Do you know that's X Development? Do you know Verily? Verily is a biotech company, and also Calico. Calico is also a biotech company. Okay, we have a Capital G Venture Capital, Google Fiber, okay, Internet Service, DeepMind AI, and Waymo. Do you know what is Waymo? And anyone know what is Waymo? Waymo is a self-driving taxi. It has already been launched in San Francisco, the US. Okay, you can see that those big tech company, they have deep pocket of cash. They can initiate, they can invest in some major projects, some interesting projects, some world-changing projects. Okay, so maybe what we commonly know that a company is just a small sector of the company. Just like in Google, maybe we just know it's a search engine and YouTube, and our horizon should be right and know that they are also involved in such businesses. All right. So next one, Amazon, AMZN, down 50% last year, 50, and well, currently we see the lower highs have not yet been broken again, and but the good news is it seems to have formed a bottom, and we wish it to form a bottom at $81, and which level will cause us to turn our wheel to bullish? 122. Okay, so now as you can see, the momentum indicators, we hope, and we need time to confirm it. Bottom, okay, we bottom out and then turn up higher. Otherwise, we will keep a bearish view on this stock. Okay, Amazon. Okay, so another Amazon result. Well, you know what? Just share with you one interesting point. The Amazon, all we know that we buy things online. We buy the Amazon.com, right? And Prime Amazon Prime, something like this. And you know what? I can say that those online business, retailing business of Amazon is not earning much money. Okay, remember this one. AWS, Amazon Web Services. This is a big one. Okay, I think most fintech companies are using this one. We are also using this one, I think. And while the online business growth 7% last quarter, AWS, again, Amazon Web Service, it is a kind of cloud, C-L-O-U-D, cloud business, okay, up 27% year on year. Okay, however, the last quarter, the profit margin, well, you see, it's just 2%. Remember, Google, it was 20% something, but for Amazon, for the whole company, net profit margin 2%. Okay, so let's see. Yeah, I saw this before. In cloud services, in cloud business, AWS is taking the lead, followed by Microsoft and Google Cloud. Okay. Now, Meta, and we have this one is a little bit interesting. Let me tell you why. 66%, about the same as Tesla last year done, and it was done heavily after the company changed its name to what? Meta. Before it was Facebook. Okay, now it's Meta platform. It is getting into the metaverse. I am still trying to figure out what metaverse is all about. I know a little. Okay, so but the interest point is, see, the momentum indicators are turning to the upside, and although the RSI has not yet returned to 50, but you see the trend is good. The trend is good. So we will have to see if 172 is broken or not. Okay, if 172 is broken, well, it could turn to be a solid buy. But of all the big tech, I hold a little reservation on this Meta, and let me tell you why. So you know what? I mentioned that the online advertisement spending has been falling for over a year, and it also affect Google, YouTube, and of course Meta is a social media. It has to use well. It depends a lot heavily on advertisement, right? So with the decline in the advertisement spending, it is also affected. Okay, plus I have to draw you to this news. This news was not very new. It was over a year ago. Well, Apple, they changed their privacy setting in the iPhone, so that those Facebook, Twitter, YouTube, they cannot track you easily. You know what? Previously, those companies can track you easily and push to you very attracting advertisement. All right. So this is a negative factor. And you know what it is? Reality Labs. Facebook, I mean Meta, they got into metaverse. They invest heavily on it. The unit is called Reality Labs. Okay, it lost over $9 billion in the first 9 months of last year. It is huge. And you know what? Though the company say this unit is going to lose significant amount of money going forward. And it is quite interesting. At the same time, this company is cutting workforce. Okay, and but they say, well, we will keep losing money on this Reality Labs. Okay, this gadget, and they are developing called virtual reality headset, something like this. And I want to know more about this metaverse thing, but I don't know. I doubt if the current the market can support a very profitable future for this unit. And let's see. So up to now, I want you to ask one question to yourself. Okay, just one question. What question? Can these big tech leaders be replaced? Well, Tesla, the Model Y, Model 3, semi-truck, well, can they be replaced? Think about that. And we have Microsoft, we have Google, Apple, Amazon cloud service. Okay, they have invested big on those services, and of course on their basic services. They are leader. They are leader with, again, with very deep cash pocket. They have a lot of cash to invest. So can these big leaders, big tech leaders, be replaced going forward? And who will replace them? I have no answer at the moment, but I can tell you, I'm confident that for a certain period of time, these big tech will remain leaders. Okay, so yeah, you ask yourself this question also and observe if any competitors will pop up. If no, if you think they will remain leaders going forward, well, the current drop in the current weakness in the share price could be regarded as a good chance to invest. All right. So the Meta, I repeat, Meta, let me say it this way: I would prefer other big techs rather than Meta. Okay, because the new business is quite interesting. Okay, and I want to share with you two more U.S. stocks. Netflix, the video streaming company, is doing well. You know what? The 20-week moving average has just broken above the 50-week moving average. It is a very good sign. And also, the relative strength index and also MACD, the momentum indicators are well directed. Okay, we know that Netflix has just generated a very what can I say, very good cash flow, and it encouraged the investors. All right, and 50%, 51% last year drop was very bad, and now we see that the 20-week moving average is providing support. So unless this key support 225 is broken, we remain bullish on this stock. Well, this is the only big US big tech stock that we are currently bullish for the long term, for the medium to long term. Okay, so NVIDIA, it is a graphic processing chip maker. Okay, last year, as you can see, the whole semiconductor sector was impacted severely last year. Well, of course, NVIDIA is a leading figure in the semiconductor sector. So we are seeing some good sign in the momentum indicators. And well, let's see if the key resistance at 195 is broken. Okay, otherwise we keep to watch this stock. Okay, above 195, well, we can turn to be bullish again. All right, so the NVIDIA, remind you that their product, their chips, are also involved in the development. It's a very key component in the development of what? AI. Okay, a very hot topic. Maybe I will talk about this topic going forward. AI, artificial intelligence. Okay, so back to some Chinese stocks. Okay, we are seeing a rebound in Chinese big tech stocks. Okay, those listed in Hong Kong: Tencent, Alibaba, Meituan, Xiaomi, something like this. And one point is that the situation of the Chinese stock delisting before we had a serious threat, potential threat of delisting of Chinese stocks in the US. It seems that the situation has been relieved, and it seems that both sides are talking, are discussing, and well, negotiating. And this threat, some investors say it's not so serious now. At the same time, we are seeing the reopening of China, and we have observed that the Chinese government seems to be turned to be warmer to these big tech stocks, not as aggressive or hawkish as before. So Tencent was down 25% last year, and recently it has posted a very decent rebound. Okay, and you can see a break above declining pattern. All right, and also the momentum indicators are pointing to the upside. All right, 460 Hong Kong dollar is our first focus upside. Okay, followed by 526. This one. All right. Of course, Alibaba. Alibaba has a lot of drama, right? Recently, Ant Group, a fintech company, the Chinese government said, well, the Ant Group can raise capital, something like this, and at the same time, Jack Ma, the founder of Alibaba, said he will give up well, his control on Ant Group. So it drives this stock, the group, Alibaba Group, higher. Okay, it was down 27% last year, but recently, like Tencent, the big tech stock, it is showing good. It is showing very appealing momentum indicators to the upward. However, one point I want you to have a look is this yellow point. The stock price Alibaba has already crossed above and solidly above the upper Bollinger Band. This is upper Bollinger Band. Okay, this thin red line, upper Bollinger Band. In the middle, we have 20-week moving average, and the lower we have the lower Bollinger Band. Bollinger Bands means that in theory, just in theory, okay, 95% of the times stock price will trade between the upper and lower Bollinger Band. Now the stock price has shot across the upper Bollinger Band, and in this case, we usually expect a kind of a consolidation going forward. Okay, so the key support has been raised to 78 Hong Kong dollar. All right, hope you like this one. Meituan, an online shopping platform, and also very well known for its well, maybe food delivery apps, right? Down 22% last year, and it is struggling. You can see it's struggling to break about this downtrend. All right, and at the same time, well, momentum so and so. Xiaomi is a handphone maker, Chinese handphone maker. 42% downside last year, and interestingly, it hit 8.3. It seems to have bottomed at 8.3 Hong Kong dollar. All right. Also in 2019, it also hit that level as a low, and now we are seeing a rebound, and also the momentum is good. The momentum is good, and we expect further rebound for this one. Okay, these four are a big component in the Hang Seng Technology Index. Okay, and I hope my showing is helpful to you. Okay, our analysis is helpful to you. Now, risk factors. Okay, I have two risk factors today. The research in COVID in China. Okay, and I hope you will dig in deeper on these risk factors. Okay, we are seeing a resurge in China, in COVID cases in China. And you know what? Back in the 2020, do you remember? We still see, maybe I give you a chart. Back in 2020, okay, at the start of 2020, stock market was climbing, even though we had news of COVID-19, the very first COVID-19 news, okay? And then in March, it tumbled. It fell off a cliff in March as the COVID news became bigger and bigger. And I am afraid maybe we are facing the same this time. I hope I'm wrong, okay? I hope I'm wrong, but we have to be prepared, okay? First point. Now, second risk factor. I don't know if you have come across this. The US Congress has formed a China committee. I repeat, okay, I repeat. The US Congress has just formed a China committee, okay? This is not good. I have been doing this series of webinar for Phillip Nova since 2018. At that time, Donald Trump was president, and he raised tax for Chinese goods imports. Okay, at that time, from that time, China and U.S. relationship has deteriorated, and since then, the relationship between China and US has not yet improved, never. And this one I can say, this China committee will worsen the situation. When these two big power, well, not in good term, and I think the financial market could be impacted. Okay, so I want you to be alert on this and get to know more about this. All right. So this is pretty much what I want to say today. And at least I forget, maybe probably next time when we meet, it will be past the Chinese New Year. Okay. So at this time, I would like to wish you and your family a very healthy and prosperous year of the rabbit. Okay. 恭喜发财。身体健康 OK 谢谢 Thank you. So now back to our new question and answer session.
All right, thank you so much for those enlightening insights. You left me agreeing with you and sometimes scratching my head at times, but thank you very much for the insights. My expectations of the big tech stocks would require some caution. Members of the audience, it's time for the Q&A right now. If you have any questions, we can pick out a few while we still have some time. We have the first question on hand from Anthony. Anthony is asking, I'm not sure if you monitor this stock, Seagate Technology, STX, performance. What do you think of the performance in 2023? Since it has dropped almost 50% since January 2022.
I'm sorry, Sri, I have not covered this one at the moment. Maybe I will reply a specific stock email or something.
Sure, sounds good. We'll follow on this question after then. All right, next question is on the Hang Seng Index. Are you still bearish on the Hang Seng? Or have we missed the upturn bullish boat for Hang Seng?
Yes, thank you. I know someone should ask this question. I will ask this question also. Well, we are seeing that Hang Seng Index. Well, this is not Hang Seng Index, but well, it is a big component of the Hang Seng Index, and it is turning up. In fact, our house view on Hang Seng Index short term is on the upside also. But I keep advising our friends to be cautious when trading Hong Kong stocks and also this big tech stock because of these factors. So I mentioned this, and this is a big one because it is a big unknown. Whenever we are trading Chinese stocks or Hong Kong stock, well, for trading Hong Kong stocks, Hong Kong listed stocks, most of the Hong Kong listed stocks are Chinese company, right? And Chinese company, they are influenced greatly by policies and Chinese government policy. In fact, it is not so easy to anticipate those Chinese policy. I mean, things could change overnight. Okay, so our advice is that if you like Hong Kong stock, just trade with caution and stick to your private point. I mean stop loss. Okay, so at the moment, it seems that the trend is still pointing to the upside, and well, set your stop loss point and stick to it. And well, and of course, you have to also stick to the Chinese news all the time. And as I mentioned, it changed overnight.
Right, Ming. If the interest rates remain high, how
Yes.
would it affect the tech stocks? Would it benefit other sectors?
Good question. And you know what, Sui? I think this one. I think this one will express what I want to say. And we have just witnessed a very steep and serious rate increase by the Federal Reserve. Hey, you know what? Central banks can make mistake. And whenever they see something wrong, and they have to change. They have to change the direction. And at the very start of this webinar, I mentioned that some analysts say, and also some high-ranking official, central bank officials say that the interest rate will keep at high point for at least for the whole year. But when you look at the CPI inflation index, when you look at those manufacturing index, they are all pointing to the downside. And I don't think they have the maintaining the power. They have the guts to maintain interest rates so high when the business sectors are screaming. All right. So let's see. And of course, high interest rate has already influenced the tech stocks. And to me, the market has already priced in most of these fears. And as at the very start of the webinar, I have to say we are looking for a bottom at the moment. So do you think that we are going to experience the kind of decline we saw last year in 2023? No, I don't think so. Okay, I hope it helps.
All right, Ming. Next question is this is probably our last question. Any other questions that you may have, you can type now or on the survey form that you will get at the end of the webinar, and we will attend to it via email. Okay, look out for the answers in our follow-up email. Okay, last question is, I think, something many investors are keen to know about. With the opening up of China, how will the Chinese stocks perform in the next 6 to 12 months? That means like short term and mid term. Which Chinese sectors will be the ones that we should be keeping a close eye on?
Okay, good question, Sri. And short term, as I have mentioned this one, we are seeing the rebound to continue. Okay, particularly those heavyweight internet stocks. Okay, Tencent, Alibaba, Meituan, these big, also big tech stocks, right? Short term, it is still on the rise, but well, Sri, you know what? When we view the Chinese market, particularly the policy change, well, 6 months is a very long time. 6 months is a very long time. So I have to say we stick to our support and target level. Okay, so I will say within 3 months. Usually, this is correct that the political situation or the policy, some new things will happen for every 3 months, and so I don't think it is good to plan for 6 months or 12 months. Okay, we maybe you stick to our webinar, and I will update you month by month. Is that a good idea?
Thank you so much, Ming Lam.
Welcome.
All right, ladies and gentlemen, thanks for joining us for tonight's webinar. That's all the time that we have. Rest assured, we'll provide the answers to the unanswered questions in our follow-up email tomorrow. And we'll also schedule a time to have Ming Lam back next month to give us more insights. Thank you once again, and see you in our next live webinar. Good night, take care, and stay safe, everybody.
Thank you.